All right, good evening, everybody. So the market is finally dipping down. So what are we going to do about it? Here's my plan going forth with this dip. Believe it or not, I am not looking to buy it as of yet. Being a little bit more cautious on it, and let me explain why. So as I can imagine, most of you may be thinking, running to buy Meta, Netflix, Tesla, Google, things like that. I, for one, am not going to be rushing out to buy them yet. And I'll explain why here in a moment. But I will tell you why I'm looking to get short Caterpillar and Citigroup, but long CSX, Delta Airlines, and Royal Caribbean. So let's go ahead and break this down real quick. So here's SPX. You can see we've been hitting this level of resistance over and over and over. Well, we did do a little bit of a move higher, stalled, and now we're coming back down. We're right at the 21 EMA. I don't personally think the 21 EMA is going to hold. I think we're going to come back down maybe to 4100. I maybe test the 50-day SMA at 40 down here. Like it's just looking like it's wanting to roll back down as price has been extended to the upside, right? So we look at here. We've been up at 2 ATR on the daily, pulling back not too much on the weekly. But all that being said, it has been a pretty strong level of resistance. And if you haven't seen me talk about this part before as well, I'm going to go ahead and bring up my trading view. This is where I use my anchored VWAPs and volume profile. I have an anchored VWAP, no, sorry, an anchored volume profile since the COVID crash, and this is the level where the most volume has been transacting on ES, right? So, and the reason it's important, this is the point of control for that level and all the time that has been unfolding. And the reason it's important is because it's a very big level that it's going to have to get over. Now, if ES can get above it and hold, like move out of this profile here, I think we can really get moving. Now, we zoom in for the year, which is this profile and over. We are above it, but you can see as you look to the left right here, look this way. You see how there wasn't a whole lot of volume. The auction wasn't there. It failed, so there wasn't any volume to help push it higher. So all that being said is it might need to oscillate a little bit more and maybe even consolidate. One thing I am watching, go over here to my, oops, sorry, my other chart right here. So this is where I have my lower time frame anchored VWAPs. So this VWAP right here is the anchored VWAP from FOMC. The blue one is from the last CPI. All that being said, and the reason it's important is that FOMC anchored VWAP has held as support since it occurred, right? Well, first volatility took us lower, we reclaimed it, and we tested it multiple times, and it held, and we reclaimed it every time. Ultimately, we ended up pushing higher, and now we're pulling back to it. Now the question is, does it hold or not? Obviously, don't know, but I am being a little bit more um, cautious on exactly just rushing in and buying the dip. Whenever I see a dip occur, I like to see it come down in an orderly fashion, meaning, a few days lower, not just one big bar all the way down to it. But like I mentioned, this is a big level of resistance up here. So there's that thesis, and the Qs have been very extended. They've rallied up. I talked about this in the options room in the small account mastery over simple trading a while back, but there was a measured move. And what exactly is a measured move? I believe it was from here to here. Nope. Where did we do it? I think it's from there. That's 25. Then you get the breakout. 25. Okay, so that's where I did. I was like, okay, I know I measured this earlier. So basically, from this move to this move was 25 points, and then from the breakout to here was 25. So what does that mean? It's just measured. Usually they go in doubles, right? So it just means that it was extended up into resistance. So I want to go ahead and crush it down. And this also rallying up into this peak right here. So this is actually where I was looking for it's a pullback, and it is finally. Like at first, I could have been dead wrong, but it's actually starting to play out. And the Qs have obviously been the strongest, and it's certainly a level worth looking to see if we're going to break out. But I think a pullback is warranted, and if the Qs pull back, I believe SPX and the rest maybe go sideways and maybe catch up to the Qs. So that's kind of like big market outlook. Now let's talk about why I'm not rushing in to buy Facebook, Netflix, Tesla, and Google. Well, all the big names everyone's wanting to trade. So I'll talk about those real fast and why I'm not looking to exactly do them. So first off is Meta. It really does look great, right? I mean, we've been trucking along, we've been moving on higher. We did this quick flush, and that was a great buy. Just been moving higher and higher and higher. Well, if I crush this out to um, zoom out to the huge gap down right? So we're about to do, we may have actually already done, we did do it. Okay, so this was gap fill. So those, or not gap fill, but gap tested, if you will. So I'm just putting this gap entry, and then this could actually be gone, and this be gone. All right, so we move it all the way lower, boom. Now we hit it. After this huge run higher, usually after you have a big move up in any type of ticker, right? Obviously, news and whatnot could obviously blast it right through it, but we've had a huge run up extended into a level. Everyone has been watching this. Everyone that's ridden this up, this was their target. So what I kind of think may unfold is, so we'll come right here. It's probably going to do a 30% pullback, right? Why 30%? Because this would be a cup and handle. The handle is typically 30%. And it would pull back roughly 30% of the move from here to here, so back to here, and then which may actually bring us down to about this level of support. That'd be good entry level, and then anticipate to play the breakout in the cup and handle. But this is why I'm not rushing out to buy the dip on Meta. I could be dead wrong on this. Obviously, the market could do whatever it wants. But I know looking at the stats, the indicators, everything says it wants to go higher. But gap entry was tested. Everyone that rid it in it up or has rode Facebook up was just targeting this, and now I think the positions are going to start being unwinded, and we're going to look for the pullback. So even if it gets to the 21 EMA, I will not look to buy this until we make the gap entry. Then maybe look for the gap fill, or maybe if I was to see some more dark pool buying or something like that. But that's why I'm not rushing in to buy Meta, because we just tested the gap entry. Now next, Netflix. Why am I not wanting to rush in to buy Netflix on this dip? Well, we have rallied up right here into resistance. And why is it resistance? I'm going to zoom out some. And all you got to do to find resistance is just look to the left, right? So you see all of this consolidation right here. Look to the left. Right there is going to be a level it's going to pause. We did come down and we rallied back up to it after having a really large extension. And from there, I believe it wants to consolidate a little bit before potentially breaking out. That's just my thesis on it. And if we would kind of draw it like that, it may want to form a little bit of ascending triangle, consolidate a bit more, then break out to the upside. If it does do so, wish to do that. But you could obviously just trade your setups as they unfold. Like the squeeze is already unfolded. It's starting to lose momentum, pulling back towards the daily 21 EMA. So I do think waiting on a little bit more consolidation and then look for that next squeeze to build. So this is going to lose momentum, go sideways a little bit, which will give it enough time to catch up. And the Qs will pull back, build another squeeze, and get ready to push back up to the upside. But this move, I think, is done, and I think it needs a little bit more sideways action before going back up to the upside. So that's why I'm not rushing to buy Netflix, simply because it's up against resistance. And if the Qs would start pulling back, I think this needs to go a little bit sideways and build the next squeeze before breaking out above this consolidation period. Now, next one, Tesla, everyone's favorite. Personally, I like it. I didn't participate in this move up simply just because it was below the 200-day SMA. But because like if the overall market is above its 200-day SMA, I don't want to look to trade it that way. So that's just a rule that I have. But I believe everyone is looking, okay, Tesla, they're going to buy the next dip lower. And for me, I personally am not. For one, it's still below the 200-day SMA. And zoom out some here. So right now, on the weekly time frame, it's just rallying up to the weekly 34 EMA. So this still tells me we're still in a downtrend, right? To me, the trend has been broken, or it's a do not trade type area. So I'm not rushing in to buy it. Also, because it's in this level, so this orange level right here is a volume profile, right? Basically market profile. Right here is a big level, and that's where we're rallying up to. If we start to fade, then we'll probably roll back down. Now, where am I wrong? I need it to see above here before I even want to trade it back up to the upside. Other than that, I'm not going to participate in Tesla until it clears those levels. But that's one reason I'm not rushing to buy it. Had a huge extension into resistance, a nice topping tail candle. If you follow Bookoff, this is topping tail, or this is a shooting star candle. Oh, sorry, not shooting star, but this is actually a gravestone doji. It's a doji with a long wick at the top, body at the bottom, basically meaning it had a chance to push up, but the sellers pushed it all back down at resistance, and basically a trigger to the downside would be a break below today's lows, and then that will trigger the downside, stop at the highs. But that's that setup. That's why I'm not rushing into buying Tesla. Another reason, or sorry, not another reason, another one I'm not rushing into buying is Google. All right, Google, another one that's been looking pretty good to the upside, right? You can't deny, look, everything's green across my labels, right? Looks great. But this is a huge extension up. And whenever you have a big extension higher up into resistance, where is resistance? Well, my friends, let me draw a little line here, draw a line across, bam. This is going to be resistance, especially on a huge move higher. So even if it comes up to here and pulls back, you can get a decent move here, but it is going to have to pull back quite a bit, maybe even build a whole their new squeeze before potentially moving back up. So just be mindful of how extended the price is. Even when we come over here, it's on the third ATR on the weekly time frame. So definitely look for that pullback. It might even be worth going ahead and selling some credit outside of it, and then looking for that pullback to unfold. So the major tickers, everyone's looking to buy the dip. I think these dips are going to have to dip for a little bit. And when I say a little bit, I don't mean exactly as far as price, but I think as far as time goes. So those are some things to keep an eye out for when you're considering taking those trades, longs, and rushing in and buying the dip. Just a few things to keep note of. But let me throw y'all guys something that you're not probably going to hear much of anywhere. So first, let's check it out. So first, diamonds, right? Where the Dow Jones Industrial Average doing? Looking pretty weak, in my opinion. We rallied up to about 340, back below the 50-day SMA. Looks like it wants to come back down to the 200-day SMA. If we go ahead and look at our, I guess we'll call our gauges in terms of looking at the market from multiple different standpoints, is it's in a squeeze. The momentum just turned bearish as we got below the key moving averages. And if the squeeze does want to play out to the downside, it looks like it would want to take us down to at least 327, 325 back to the downside. So if the diamonds are weak, so look at industrials. Industrials are not looking too strong either. They are building this little flag, right? We had a big swing lower, consolidating, and it's in a squeeze. It looks like I'm anticipating this squeeze to fire to the downside. Right now it is dark blue. I'm expecting tomorrow to be a big fat red candle. And if it does, even if you play squeezes or if you're a chart pattern trader, right? Simply a bear flag formation is nothing more than you have a major swing lower. Where is that? Right here. Get consolidation. Where's your trigger short is when you get a candle close like this, stop at the highs, and then you write it back down. So if that's going to play out, how can we play it, right? So if XLI is looking weak, if this squeeze is going to go short, then we just have to find some short setups inside the industrials or the diamonds. And one that I'm actually liking is Caterpillar for a short. So going ahead and take a step back. It is below all of its key moving averages after a gap up after, oh, I did not have earnings. I was thinking gapped up was earnings. Gapped up, tested the 50-day SMA and failed. This orange box that I have drawn right here is just volume point of control, right? I put VPOC. So this is basically just a level where a lot of volume has occurred. If we got above it, absolutely go long. If we're below it, stay short, and a high compression squeeze. And also, I want to go ahead and minimize this here. Go here. Here's Caterpillar. So for great context, we have a weekly squeeze. It's firing short. There is a high compression squeeze on the daily. And this is a 39-minute that looks like, see how it was like right here in this area, and it's starting to look like it wants to roll over, and this is the 39-minute. and it would potentially roll back down. So in the context of the weekly squeeze firing short, you would look for this high compression squeeze to continue short, especially with XLI looking weak, followed up with the diamonds. So that looks like a very clean short in my opinion. I know the market is looking like it wants to turn, but if you're a basket trader and you need some hedges, this wouldn't be too bad of an idea to hold short to the downside. Now another one that's looking interesting to the short side is Citigroup. This one is in a squeeze at the 21 EMA below all key moving averages. Same thing as Caterpillar. Look, this one's in a weekly squeeze. EMAs are stacked negative on the weekly and daily. We kind of have this little flag formation building, but nonetheless, if this trend line breaks, I think it has a pretty good flush. So with the context of the weekly time frame being short, and then the daily time frame in a squeeze being negative, the Dow Jones is looking negative, and it's below all key moving averages. I think this looks great for a squeeze back to the downside as well. Just to play the squeeze, probably down to about 43, 44. And we'll see what happens past there, which is the second ATR, right? So if you're playing a squeeze, your target is the one or second ATR, draw a line across, I'll line you up there perfectly. So those are two short ideas. Now let me bring you some unorthodox longs you maybe probably no one else is talking about right now in the social medias that you're following. All right, but I do find some decent setups in there. But they haven't quite triggered yet. You got to wait for the trigger, but they're kind of looking pretty solid in my opinion. So CSX is in a squeeze. It has green 10X bars. It's at the 21 EMA and recently did a flag breakout. Now, I'm not exactly going to rush in to buy it, right? So there was this consolidation period. We did get a breakout and now it's pulling back. If you've followed me or have heard me talk before in terms of trading and patterns, I do like break and retest, right? I didn't exactly rush in to buy this dip here because I want to wait for a little bit more. I want to see a little bit of a dip to here and then look to take it back up. So in that case, so roughly I'll say 30, 31.25, maybe even 31. That's where I would want to get long, anticipating the price to hold. So in the context of the green 10x bars, as we recent large breakout, I want to go over to my 10x bars on steroids chart. And right here, I like to time my entries like this. So in the context of the larger time frame, breaking out right green 10x bars, this trend line, there is a hourly squeeze going negative, which is great. I want it to fire short because I want a better entry. So if it does push down to here, the squeeze pushes it lower. And then whenever I get that hourly squeeze fire short, and then I get a arrow similar to this one, after it fires short around here, so I get an arrow about right here on the hourly time frame, then I would look to go ahead. If the squeeze momentum is starting to shift, I'd look to go long in the context that the larger time frame is wanting to go higher. So this is one bullish squeeze, or not bullish squeeze. Well, it isn't a bullish squeeze, but this is one bullish setup I am watching. But depending on how price looks on the dip, I'll look to get long then. CSX, waiting for the hourly squeeze to fire lower, get a high of low bar reversal signal in the context of the larger time frame, and look to have that price continue higher. Another one is Delta Airlines. Airlines have been getting a little bit of love. Today, I was watching it. It didn't give me as much of a dip as I was wanting today to get long. It's still not quite in my entry level. So there is this we came down, built this little flag, and we did push up above, and now we're in a bullish squeeze, right, with early end signals. I don't exactly want to get in just yet. I am honestly waiting for it to give me a little bit more of a dip. I want to be disciplined on my entry and get in a little bit lower and then look for that squeeze to play back up to the upside. So it's a bullish squeeze, looks great to the upside after this consolidation, big strong breakout, moving sideways, but I want to wait for that dip to the 21 EMA. Maybe this will give me one of those break and retests like I was talking about, right? Get our break, back, retest, maybe get a little candle like this. That'd be great. Next candle triggers to the long side and then play it back up. And something worth noting as well right now, you can see how on the breakout to the upside, volume participated in the breakout. So I'm going to look for that to stick a little bit. So Delta Airlines looks great to the upside. Another one, maybe travel tickers are going to start moving some. Another one, believe it or not, is Royal Caribbean. So looking good to the upside. You just simply look beta. It's in the 95% of his yearly channel. Stacked EMAs, VWAP stack positive, but I want it to give me a pullback. I'm not rushing in just yet. So if this does pull back, right? All right, so yeah, pull back. There it is. I was clicking around. All right, so green 10 experts. I don't want to rush in just yet. We are at this level of consolidation, right? But this is why I'm expecting it to pull back from here, right? So right here is going to be resistance, right? Because all, like I mentioned earlier in this video, is just go ahead and look to the left. Cool, we're up here. It's looking great. The squeeze has already fired, starting to lose momentum. No problem. Let's go ahead and let this consolidate and pull back to the daily 21 EMA. And in the context of everything firing to the upside, right? Just like Caterpillar and all that, that was looking weak to the downside, look at Royal Caribbean in the opposite direction. It consolidated on the weekly time frame, explosion. Great. Now we had this weekly time frame that is still firing the squeeze. A squeeze typically fires for 8 to 10 bars. We're only 4 bars in, 4 weeks in. We still have 4 weeks to go. That doesn't mean on the lower time frames that you can't consolidate, pull back, and once you pull back to the daily 21 EMA, what I like about here is if I draw this line against this level of support, guess what? That's right where the daily 21 EMA is. So if we get a pullback of support, basically 75, which is going to line us up with the weekly 8 EMA, in the context of this weekly squeeze, firing to the long side, coming down to support near 75, near the 21 EMA, then I will look for this to play back up to the upside and look for the move probably up to about 85 is where I'm going to look for it to go. So dip to 75, up to 85, that's a pretty good, decent percentage move. All right, so that is everything that I am looking to, how I'm looking to handle this dip. Be cautious on the dip. I'm looking for the keys to come further down. I'm actually targeting 330 for now. To have my money where my mouth is, I actually have a put calendar looking for this to go lower. We got into position when the expected move occurred in the small account mastery. So I'm looking for price to come down to about 330 by the end of the week. Look for consolidate and then go from there. But prices are extended. Be cautious on your pullbacks. Always look to the left. I know certain tickers can look like they have a really good squeeze and whatnot, but just because the indicator says something doesn't mean technicals can't overpower it. So I say be cautious on it. But all that being said, I conclude on why I'm not buying Meta, Netflix, Tesla, or Google, but I am looking to short Caterpillar and Citigroup and wait for my entries on Royal Caribbean, Delta Airlines, and CSX. But that's all I have for everyone. I hope y'all have a great evening, and we'll see how this all unfolds. Take care, everybody.